We take stock of how activity is shaping up on Deal Street. Grant Thornton has released their deal tracker report for activity in July 2016. And to take a closer look at the trends, I'm joined by Prashant Mehra, partner at Grant Thornton. Prashant, always a pleasure to have you on the show. First, I'll go into the details of the M&A and the private equity breakup in a bit, but help me understand. The deal value at $4.8 billion is a tad lower on a year-on-year basis. Are we seeing some kind of a broader contraction, so to speak?
Hi, Kritika. I mean, no, not really. I mean, I think, a tad lower, we shouldn't read too much into that. But I think the larger point being that of the $4.8 billion, which you rightly mentioned, a significant part of that has actually come from domestic consolidation, which is and contributed about $2 billion. And the other significant portion is from cross-border deals. Private equity, yes, it's been substantially low in terms of value and volume, which was kind of expected, and since most of the investments are happening in the startup space as well as the ITES space, where the deal sizes are not too large. So the $700 million just being contributed by PE is probably a reason for worry, but I'm sure with the significant developments which we've seen post-July, especially in terms of the GST bill being passed, the tide will change.
Let me ask you about the eightfold increase that you've seen as far as the domestic M&A is concerned. Is that sustainable? Will that continue? And if yes, what sectors seem to be dominating the trend here?
Yeah. So I'll take the last one first, in terms of the sector spread. So in the M&A space, about 70% has been contributed between pharma and manufacturing, which has been the two sectors which have been trending well, and we expect the trend to continue. In terms of the M&A, $2 billion, whether it's sustainable, whether we will see similar momentum going forward, I think yes, actually, and in fact even more. We've seen a few signs which I mentioned, the significant milestone being achieved in terms of the GST bill being passed. There is a spur in consumption spending which is expected from the 7th Pay Commission rewards. There is already an increase in rural consumption. I think all these factors will together booster growth in the economy, and when that happens, I think one thing which will surely be witnessed is consolidation, in fact much awaited consolidation in the domestic M&A space. And I think from a sector perspective, if the economic growth needs to be seen, we will probably witness the growth in manufacturing, consumer and the infrastructure space, where substantially the activity will increase.
Why has private equity investment gone down then, Prashant, in this quarter?
Private equity investment, I mean, the reason I see that, the ITES startups was a pet sector for the private equity space since about a year or two now. And there have been valuation corrections, the risk awareness to the startup and ITES sector has started trending in, which is why we are seeing the low contribution there. But I think, with the domestic consolidation happening, the domestic M&A rising, private equity will now be seen not as a primary growth capital but as an alternate means of financing these domestic transactions, and we will surely see some big ticket investments there, which is also a much awaited thing.
You spoke about GST earlier, Prashant. Now that, I think from the last 6 years, we've all been talking about how when GST comes about, foreign investors will increase their investments. Say in the next 1 year, is there a concrete plan that you see in place where foreign investors are looking at increasing their investments?
Yes, I think, there are a lot of, as we saw when the government changed a couple of years back, we saw a spur of investments coming in, which was frankly not due to really the new government coming in, but, a helm of optimism which was there that things will change. With the GST coming in, I feel the same, that, there are a lot of investments, there are a lot of transaction doers who are actually at the door, which are just waiting for the next wave to happen, which probably it already has with the GST, which will just rush in with their investments and backing consolidations and making investments in infrastructure. Because, I mean, let's face it, GST was something which was a much wanted thing, and as the government has been rightly putting it, it puts the entire country as one, uniform taxation system. I don't think from a manufacturing perspective, we as an economy can ask for something better than that.
Oh, absolutely. Thanks, the Prashant. Completely out of time. Mehra, you're on Reporter's Diary. Overall, the deal pipeline looks strong, and there has been some kind of contraction, but only on a broader level. Domestic M&A still picking up. That's all we have for you.